It's been a terrible quarter, the worst since we've seen since 2007, 2009, the Great Recession. So confidence has been at an all-time low, mainly due to China at the start of the year. That forces a lot of the larger IPOs, Nasdaq main market here in London, to falter, and unfortunately that confidence slips down to the AIM market. But it is changing. The tide is changing. Especially over the last month, there's been some quite high-profile IPOs, such as here the CYBG Bank, Metro Bank, CMC Markets, all main market IPOs that have held up and really held their gains since IPOing a couple of weeks ago. I think it's going to be fairly sluggish, especially in the US. There's certain giants out there that almost dictate the IPO sentiment. I mean, Uber's CEO coming out saying, I don't need the public markets, I'm fine with the flexibility. He's raised about 10 billion over the past 18 months. So there's a lot of companies that like the independence of being private. I think Snapchat being one of them. And I think right now it's a huge risk for those types of companies to come onto the public markets, because it is still very volatile. But on the smaller end, especially on AIM here in the UK, it's looking very strong. Duncan Bannatyne, obviously very well known. Dragon, he's putting the feelers out about floating his health chain. So there's lots to look forward to here in the UK. You've always got to have a sense of what's the rationale behind the IPO. It's very difficult, but working with your advisor, seeing why the company wants to IPO. If there's a private equity house behind it, they want the biggest valuation they can get because they're selling out their position. And you don't want to see what happened in 2014 with large IPOs, lots of private equity investors getting out of it, really forcing them onto the market, very toppy valuations, and then they taper off. And I think what we need right now is real decent earnings, cash generative businesses coming to AIM that almost can have a little recession blanket on, that whether what's happening in China, it doesn't really detract the business from what it's doing on a day-to-day basis. There's a lot of excitement around IPOs, especially companies that people know about. I mean, Uber, Facebook, Twitter, here in the UK, obviously with Metro Bank and Clydesdale, and we had Just Eat and Saga a couple of years ago. People use those brands on a daily basis, who would like a bit of piece of the pie on those companies. However, if you're new to investing, then it's probably best to wait in the aftermarket just to see the mechanics of how these IPOs work, really, because it is very high risk. I think Joules, very prominent clothing brand here in the UK. It's not definite, but again, it's one that we all know and love. So it's picking those ones that people use on a daily basis. They're more likely to invest, but again, it's all going to come down to valuation.